Hi everyone, this is Rob Roy and welcome to the LA Wave Options U.S. Market Update. GameStop announced a stock split. Is it time to buy GameStop stock? Let's take a look at the charts. In last night's insiders meeting, one of our subscribers asked, is it time to buy GameStop? What an interesting question, because after the close last night, perhaps you know this, GameStop said in extended trading that they intended to implement a stock split. Or did they? What they really said is that they're looking for shareholder approval to increase the shares from 300 million shares to 1 billion shares to partly conduct a stock split in the form of a stock dividend, and shares jumped in after hours trading. We'll look at that in a minute, but one of the things that I wanted to share with you is you have to be careful. This is a very smart thing for the company GameStop, but normally when you have a stock split, buyers come in, traders come in, and they buy the shares because stocks tend to run up into the split, and the actual split happens, and then you got extra shares, so sometimes there's a little bit of a drop down after the actual split, but then because you have a lower price and it attracts more buyers, the stock tends to turn and go back up. So in general terms, a stock split is viewed as a very good thing, and traders can make some money. I have a system for trading stock splits as well, but there's different motives behind the stock split. And what I think here, if you read this, it was not clear how much of the increased share count would be used for the stock split. GameStop inserted a line in the regulatory filing that suggested part of the increase could be used at some point for other means, possibly selling more stock. So that's what companies can do. Think of this. They announce a potential stock split, so the shareholders hold the shares that they have. It attracts more shareholders that say, oh, GameStop is going to go through a split. I want the additional shares. The stock usually goes up after a split, and it runs into the split as well. But if from the company standpoint, if all the shares aren't being used for the split and they're going to sell some shares, it gives them the opportunity to sell a lot of shares while the price holds in there. So there's buyers coming in that want to own the shares going into the split, and that allows the company to sell some stock without tanking the stock by selling a large amount of shares. So going from 300 million to 1 billion shares, that's a lot of different shares, a lot of additional shares. And so I just wanted you to be cautious of that, because it doesn't necessarily mean that GameStop is going to take off and run. You have to be aware of what's the motives behind the scenes and whether or not that's a positive as far as the stock split. So looking at what GameStop did today, you can see it did open higher, but look what happened. It closed near the low of the day. So I think there's enough people out there that are probably smart enough to be aware of, hey, if you really read the fine print there, it sounds like these aren't shares just being authorized for a stock split. They're looking to sell more shares, so they're going to dilute the float and try to keep people buying and hold the price up while they go through and do that. Again, a smart thing on GameStop's standpoint, so where they can raise cash and shore up their balance sheet, because remember, before all this meme stuff started and the stock took off in the past, they were in real trouble. They were looking for potential bankruptcy or looking at potential bankruptcy. So thought I'd share that with you as something interesting that occurred this week as well. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.